The debt crisis debacle continues to send the euro lower. It's down at a decade low against the yen. So how much further does it have to go? Well, let's find out from Stephen Saywell. He's head of foreign exchange strategy for Europe at BNP Paribas. Thank you so much for joining us today. In terms of what we're seeing on the euro, are we going to talk about a new band compared to the dollar, or is it going to be pretty much staying at this 133 to 135 level?
Well, I think it's first a good idea to look at what got us down to these levels, and I think it's disappointment with the IMF meetings at the weekend. We didn't get anything clear as far as policy response out of those meetings, and that's continued this trend of euro weakness. I think looking forward, however, we're getting to a point now where the euro is becoming quite oversold. There's a strong consensus in the market that the euro is going down, and this is often exactly when the market is wrong-footed. Now, on this scenario, I would highlight some of the event risks that we have in Europe this week. Firstly, we have the vote in the Greek Parliament on the further austerity measures, and then going forward for the rest of the week, we have votes in several Eurozone countries or in their parliaments on the ratification of the expansion of the EFSF. The point I would make about these four events is if they do come out positively, if we do see those parliaments ratify the ESF expansion, we could actually see a positive policy response out of Europe, and the euro may be quite vulnerable to a spike. So we could see actually some of this extreme bearishness unwind as far as the euro is concerned.
Stephen, it seems that actually a lot of the investors focused on the equity markets are focusing on one thing, and the ones on the FX are focusing on other things. Sure, everyone was disappointed that we didn't get something a little bit more concrete out of Washington, but it does seem that the equity markets today are taking the cue from the fact that it is likely we're going to get an enlarged EFSF, and they're certainly pointing to the central bank to be giving some kind of an indication that it's ready to step up to the plate in the next couple of weeks, if not on Thursday. So why are FX not actually trading on that?
Well, I think we've got a similar scenario here. I think both equity markets and FX markets are looking at prospects for Europe. I think they want strong action. I think they're looking to see what happens down the road, and I think there's ongoing nervousness here. The point I'd make about the FX markets is there's quite strong consensus out there that there is no action and the euro comes lower.
Yeah.
I think certainly my point here would be to focus back on the timeline and look at expectations of what's coming out, and that's where I think we may get the next signal for the euro.
And so at what point would you be buying euro? Is there a level where you say, actually, it's been so oversold that this would be a good buying opportunity for my clients?
Well, I think clearly we need a catalyst from the political side, and I think this is what's making the euro-dollar so difficult to trade. It's not really driven by fundamentals or levels. It's really a response to the politics. So I think what I would be eyeing up those votes I spoke about, Greek Parliament and the 3 ratifications from European countries on the EFSF. If we do get positive outcomes there, then I think that would be the catalyst for a spike in euro-dollar.
So what would you be buying right now? We talk also about the Aussie dollar, the Canadian dollar, or the pound. Is there anything that looks more attractive than the rest of the world?
Well, sure. I think certainly what we're seeing in foreign exchange markets is a risk-off trading environment. So we're seeing Asian currencies being sold off against the dollar. We're seeing the dollar very strong, and also those currencies related to Asia or high growth, such as the Australian dollar, the New Zealand dollar, also coming off significantly. One idea that we have here at BNP Paribas is that we actually like the Norwegian kroner relative to the Swedish kroner. I think the point we highlight here is that the Norwegian central bank is one of the only major central banks that we think is unlikely to ease policy as growth slows, and we think that will bode very well for the Norwegian kroner. The other point, of course, here is we think oil will continue to do fairly well over the next quarter. That's another support for Norway. So one of our top tips is long the Norwegian kroner against the Swedish kroner.
All right, interesting. Stephen, thank you so much. Stephen Saywell, their head of foreign exchange strategy for Europe at BNP Paribas.